Hello, welcome to this presentation on business responsibility and sustainability reporting, commonly known as the BRSR Framework. This is a presentation which is in continuation of the deep dive series into the BRSR Framework. In this series, we have covered the overview of the framework, the 9 KPIs under the BRSR core, Section A of the framework, Section B of the framework, and the first principle under Section C of the framework. So in this video, we will cover principle number 2 of the NGRBC. Let's dive in. My name is NVS Pawan Kumar. I'm a chartered accountant, a GRI certified sustainability professional, and an ISO 14064 lead verifier. Let us just revise the structure of Section C. Under Section C, companies have to make disclosures under the 9 NGRBC principles. These disclosures are of two kinds: essential indicators and leadership indicators. Essential indicators are expected to be disclosed by all the companies, and leadership indicators are voluntary in nature and may be done by aspiring entities. The essential indicators in this presentation have been indicated under the blue box, and the leadership indicators have been indicated with the green box. So let us see what is Principle 2. Principle 2 is reporting on environmentally sustainable business, which means businesses should provide goods and services in a manner that is sustainable and safe. Basically, under this principle, the companies have to disclose how they are proactively taking steps to make their goods and services sustainable. How can they make it sustainable? A, by doing effective waste management. B, by promoting circularity, that is, using more and more recycled inputs in their products. And C, conducting studies like life cycle assessment, etc., to actually identify their environmental footprint. There are 4 essential indicators and 5 leadership indicators under this principle. Let us see them one by one. The first indicator is the percentage of R&D and capital investment in specific technologies with environmental and social impacts. So every year, every company would be making some expenditure under R&D and capital investment. This particular KPI asks the companies to give the percentage of those R&D expenditure which was specifically done to develop technologies or any other initiative which has environmental impact or a social impact. Similarly, the percentage of the capex out of the total capex of the company for that year, which was made for a project which has got environmental or social impacts. Let us take the example of Pidilite Industries Limited, which makes the very famous brand Fevicol. In its BRSR report for the financial year 24-25, it has stated that it has made 5.3% of R&D into specific technologies for environmental impact, like replacing non-recyclable plastics with recyclable plastics, which is point number 3. Then point number 2, replacing hazardous solvent-based products with safer alternatives and other projects. Similarly, it has made some capex which form around 4.41% of their total capital expenditure for financial year 24-25. And mostly these have been in upgrading the machinery and equipment to reduce energy consumption and reduce the carbon footprint. Coming to the indicator number 2, which is, does the entity have procedures in place for sustainable sourcing? If yes, what percentage of inputs were sourced sustainably? What is sustainable sourcing? Sustainable sourcing means a company not only adopts sustainable practices, but also drives it in its entire value chain. It means the company procures only from such suppliers who are engaged in making their products sustainably. In a crude way, we must say that the supplier should be certified with the environmental standards, operational health and safety standards. That is basically ISO 45000, ISO 14000, etc. So many of the companies also have their own supplier policy and conduct ESG assessments when they are picking a supplier. So the company has to describe the procedure which it adopts for sustainable sourcing and the percentage of inputs which were procured sustainably during the financial year. Let us take an example for this. Let's take the case of Britannia Industries Limited, which has disclosed in its BRSR report for financial year 24-25 that it has got a sustainable sourcing policy which sets out a structured approach to responsible procurement practices. What does it do? A, it prioritizes local sourcing so that it reduces the transportation and thus the carbon footprint. B, it has a supplier code of conduct which articulates clear ESG expectations from its suppliers. And C, it has an annual supplier ESG assessment to promote continuous improvement. So the suppliers which fulfill all these criteria can only supply to Britannia Industries Limited. Interestingly, for the question, what percentage of inputs were sourced sustainably, it has given a reply that during 24-25 financial year, 97.7% of our procurement expenditure was spent on sourcing within India. So it is not very clear how much of it was from suppliers who fulfilled these criteria. The reason why this percentage is given is it is not possible for any company to just switch over to sustainable sourcing from day one. It takes time. So this percentage is very important when we compare on a year-to-year basis. The third indicator, which is an essential one, is describe the processes in place to reclaim the products for reusing, recycling, and disposing at the end of life. Now, this terminology of reclaiming the product is a bit confusing here because it talks about plastics, including packaging, e-waste, hazardous waste, and other waste. So effectively, it is saying what amount of waste, including the packaging waste, which was discarded at the end of life of the product, was taken back from the environment and reused or recycled or disposed. So we have to understand here, reclaim of the product does not mean that a product which did not pass the quality test was taken back, back from the QC department, back to the scrapyard and then reused. No, it is after it has been used by the final consumer only. So now we have to understand what practically happens on the ground and how do companies reclaim these wastes. There is a set of organizations called Producers Responsibility Organizations or PROs. These are professional organizations who help the companies in managing their wastes. They act as consultants as well as business partners in working at the ground level so that the company can actually focus on its own production and R&D and its own activity. So some of the examples of the popular PROs are Recycle and Banyan Nation. So what exactly do these PROs do is they provide logistical support for the collection and transport of waste. They collaborate with the licensed recyclers, end-of-life processors for waste processing, and they manage the EPR compliance reporting and documentation. What is EPR compliance reporting? We'll see it in the subsequent slides. So these PROs are very essential today in managing the entire waste of the responsibility of managing waste of the company. The next indicator is whether EPR is applicable to the entity's activities and whether the waste collection plan is in line with the EPR plan submitted to the Pollution Control Board. If no steps taken to address the same. What is EPR? EPR is Extended Producer's Responsibility. So the Government of India, particularly the Ministry of Environment, Forests and Climate Change, has become very strict with respect to the pollution which is being created by certain elements like plastic, used oil, used tires, e-waste, and battery waste. So what it has done is, it has shifted the responsibility of clearing the plastic from the environment, not to the consumer of the good, but to the producer of the plastic. Let's take the example of plastic here. Any producer of the plastic, that is a manufacturer of a polythene bag or a bottle, or any importer of the plastic, or any brand owner which gets its packaging material produced by an unknown facility. All these three entities have been made responsible to clear out the same amount of plastic from the environment which they had injected into the market. This is extended producer's responsibility. So the principle of extended producer's responsibility is that the polluter should pay for managing the impact of plastic pollution which was generated by it to earn profits. The company, by selling its product in plastic packaging, created plastic pollution. So it is his responsibility to clear the same amount of plastic from the market. The second principle of extended producer responsibility is that there should be transparency in target setting. So the target for any company to remove certain amount of plastic or other waste from the market is the amount which it injected into the market. So it is very transparent. And accountability of outcomes through continuous monitoring. So all these organizations, which is producers, importers, and brand owners, have to file quarterly returns as to what was the amount of plastic or other waste which was injected into the market, and what is it that they have removed from the market, either by recycling it or by disposing it off safely. Let's go a bit deeper into this EPR. What are the wastes on which EPR is applicable? As we have discussed, plastic waste, battery waste, e-waste, tire waste, and used oil waste. At present, EPR is applicable on these 5 kind of wastes. Particularly for plastic waste, which is the most problematic thing at present, plastic waste is divided into 5 categories. Rigid plastic, which is, for example, the plastic in which we get our shampoo bottles, the cream bottles, etc. Flexible plastic, which is sheets of plastic, single sheet or multiple sheet. Multi-layer plastic, when plastic is mixed with other material like paper, etc. And compostable plastics, which contains material which can biodegrade over a period of time. So there are 5 categories of plastic waste. So if a PBO, this producer or an importer or a brand owner, injects any one or more of these 5 categories of plastics into the market, he will be given a target to remove the same amount of plastic in this under the same category from the market as per EPR. Let us dive in further into this and understand how this entire plastic waste moves and how today the organizations are meeting this responsibility of removal of plastic. Let us understand this chart. So a company sells products using plastic packaging. It sells its products to consumer. The consumer, when when has completed using the product, which is, let's say, shampoo, throws the plastic waste into a dustbin. From the dustbin, a collector or an aggregator collects those plastics. In India, this is basically still an unorganized sector, which consists of mostly the individual rag pickers. So the collectors or the aggregators give this plastic to plastic waste recyclers or end-of-life processors. So the recyclable plastic waste, which is rigid plastic, the PET bottles, Bisleri and Kinley, etc., all those plastics go to the plastic waste recyclers. And those plastics which are unrecyclable, like multi-layered plastics, styrofoam, etc., go to the end-of-life plastic processors. The plastic waste recyclers create plastic pellets after recycling and push it back into the market. The same plastic pellets are recycled as input in making the packaging by the companies. So this is where the recycling happens. For the portion of the plastic which is unrecyclable, the end-of-life plastic processors use it to convert it into energy. It is also used for road making. And it is also used in cement co-processing for making clinkers. So this is how the chain of plastic from its origin to the recycling and back to its origin or to some other processing or after its end of life. Now, coming to the EPR, the EPR responsibility is completely governed by the EPR portal managed by the Central Pollution Control Board. There are 2 kinds of participants in this portal, mainly 2 kinds of participants in this portal. One, the producer, manufacturer, importer, and brand owner, PBO, and the plastic waste processors, PWP. This consists of companies like Nestle, Hindustan Unilever, whose products are sold in plastic packaging. And PWP consists of plastic waste recyclers and end of plastic processes. Now, when the plastic waste recyclers generate plastic pellets, they have obviously consumed some recyclable plastic waste. But for this recyclable plastic waste which they have consumed, they create EPR certificates. It means the amount of plastic which has been taken out of the market is reflected in this EPR certificate. These certificates, upon verification, are uploaded in the EPR portal. PIBO, the producer, manufacturer, or the brand owners, have two options. A, either they manage this entire thing on their own, or they can simply purchase these EPR certificates, thus paying for managing the impact of plastic pollution. So when they buy EPR certificates, it goes to the plastic waste recyclers as revenue. So they are indirectly paying these recyclers and end-of-life processors for managing the entire waste on their behalf. Now, this is where the role of the producer's responsibility organization comes in. They, as we said, that they are the business partners as well. They have collectors and aggregators under them. They liaison with the plastic waste recyclers and end-of-life plastic processors and see to it that the EPR certificates are generated under the specific categories which is required by the company and ensure that it is made available to them for purchase. I hope this entire cycle of plastic was clear. Let's take an example. Let's see how MRF Limited, which makes MRF tires, manages its EPR responsibility. So the extended producer responsibility is applicable to MRF for end-of-life tire and plastic. And what MRF is doing is they are buying EPR credits from registered recyclers as per the regulation. For EPR tire and plastic, yearly targets obligation set by the Central Pollution Control Board is met by procuring credit certificate from the authorized recyclers, and annual returns are filed in the CPCB portal for compliance. So effectively, this is what they are doing. And most companies are doing the same. So the real work of the company is to make products, to design products, not to manage waste. So there's a special set of organizations developing now which manage the waste for these companies. Now we have come to the leadership indicators. You can see the heading is under the green box. So whether life cycle assessment has been conducted for any of the products or services, provide details in this format. The NIC code of the product, name of the product, percentage of total turnover, boundary for which the LCA was conducted, and whether it was conducted independently by an external agency, and whether the results have been communicated in the public domain. Let us understand what is life cycle assessment first. Life cycle assessment is governed by ISO 14040 and 14044 standards. ISO 14040 gives the principle and the framework for life cycle assessment. And ISO 14044 is actually the guidance of doing life cycle assessment from end to end. What is life cycle assessment? Life cycle assessment is an analytical procedure that helps identify, quantify, and manage the environmental impacts associated with all the stages of the product. That is, the environmental impacts from raw material extraction, the environmental impact in manufacturing, the environmental impact in distribution of the product, the environmental impact during the use of the product, and the environmental impact when it is disposed at the end of its life. What do I mean by environmental impact? Environmental impact means the greenhouse gas emissions because of the product, the fresh water consumption used, consumed because of the product, and the land use impacts because of the product. The life cycle assessment can be done for three boundaries. As we had discussed, the entire life of the product starts from raw material extraction and goes up to end of life. So if a company does the environmental impact study, that is, identifies, quantifies, and manages the environmental impact from the raw material extraction up to its factory gate, that means the factory out gate, before the goods are dispatched to the distributors or final customers. That is called cradle to gate boundary. Cradle meaning the birth of the baby, that is raw material extraction, until the gate of the factory. If the company does a life cycle assessment from raw material extraction up to the final showroom or the shelf of the supermarket, it is called cradle to customer boundary, where the customer can go and pick it up. The next point is if the company does a life cycle assessment from cradle to grave boundary, it means it does assessment from raw material extraction and up to the end of life disposal. At each stage, it identifies and can quantify the environmental impact because of this product. It's called cradle to grave. I've shown here the example of a car, how the raw material for the car is extracted, manufactured, it's distributed in huge trucks all over the country. It is used by millions of people in the country, and finally it is disposed of. So let's take the example of one of the biggest car makers of India, Tata Motors. It has done a life cycle assessment from cradle to TML gate, that is from raw material extraction until the manufacturing. It has done the life cycle assessment for small commercial vehicles, light medium commercial vehicles, and heavy commercial vehicles, which form 10, 13, and 48% of its turnover. And they have done it internally and they have not published the results. The follow-up question for this is in the next indicator, which is any significant environmental or social concerns or risks arising from the life cycle assessment, provide details on the actions taken. So if the company has done a life cycle assessment, then, and if there is anything which is of a risk, environmentally or socially, then that needs to be disclosed. Like we'll continue with the example of Tata Motors. In its life cycle assessment for all the three kind of vehicles, the major risk or concern was global warming potential, which is carbon footprint, which is generated from the products. And what action is Tata Motors, promising to take? That the materials or components with higher carbon footprint contributions have been identified, and actions have been initiated with engineering teams and suppliers to increase material circularity, which is converting the waste back into input, as we had discussed earlier, and reducing the carbon footprint impact. Indicator number 3 under the leadership indicators is the percentage of recycled or reused input material to the total material by value used in production or in providing services. So the company, as we had discussed in that chart, that the company can buy the recycled plastic from the market and reuse it in making its packaging. So here in this indicator, it has to disclose how much of such packaging material is made out of recycled plastic. It asks the percentage by value. What will be the value of the recycled plastic? Ideally, it should be the value at which they have procured the recycled materials. So, for example, Tata Steel Limited has disclosed that it has recycled limestone and trona and reused it as input material to its total material. Coming to disclosure number 4 or indicator number 4, which is of the products reclaimed at the end of life, the quantity of them reused, recycled, and safely disposed in the given format. Again, this is relates to the same work of the producer's responsibility organization. How much, basically here the companies have to disclose how much of the EPR credits have they purchased for reused plastic, for recycled plastic, for safely disposed plastic, or reused e-waste, or recycled e-waste, or safely disposed e-waste, and the same. Because today, this is the most prevalent method on ground of how companies are managing their wastes. Let's take an example of Pidilite Industries Limited again. It clearly states that since April 2023, EPR for plastics have been carried out by purchase of EPR credits from plastic waste processors via portal maintained by the CPCB in line with the applicable guidelines. The company collects post-consumer used plastic packaging waste from the market equal to 100% of the plastic packaging from the company and introduced into the market on brand neutral basis. On-ground plastic waste collection and disposal is implemented by the plastic waste management agencies and recycled or end-of-life process through PWPs that are authorized and monitored by the CPCB or state pollution control boards. So the 31,655 tons of recycled plastic was through EPR credits. One thing regarding EPR, which I forgot to mention, is that Pidilite Industries Limited has introduced some plastic with the brand name Pidilite Industries Fevicol. It is not required that Pidilite Industries Limited has to buy the plastic of Fevicol only. No, the brand name does not matter here. What matters is the category of plastic. If Pidilite Industries Limited has introduced 100 tons of rigid plastic in the market, it has to recycle 100 tons of rigid plastics from the market. And obviously, it will do it through purchasing EPR credits. The last leadership indicator is again relates to the same thing, reclaimed products and their packaging materials as a percentage of products sold under each product category. This is again a very tricky question because it does not specify whether it is quantity or in terms of value. And again,
it is very difficult to categorize it for each product category. So most of the companies have either left it blank or they have not given any clear answer for this. Let's take the case of Mahindra and Mahindra Limited, which manufactures cars. In its BRSR report for 24-25, under this point, that is about reclaimed products and their packaging materials as a percentage of products sold, what they have mentioned is that the company has recycled 2,413 metric tons of plastics as a part of its EPR compliance under the plastic waste management rules. It has not given a percentage to products sold, which so the same has been done by many companies. They have either avoided or not given a satisfactory answer for this. So maybe it is time that SEBI review some of these indicators so that it start to make more sense in the present day environment. So that was all about the disclosures under Principle 2 of the NGRBC principles. While we may say that the companies are still maturing in the sense in managing their waste, getting the life cycle assessments done. But the good part now is organizations like Recycle and Banyan Nations who have come up and who are helping uh, these companies to manage their waste and ensuring that they are compliant with the pollution board regulations, and also actually they are more sustainable in their business practices. Thank you.